What's up, you guys? It's a new day. A new day to make some money. The market is looking good. A lot of opportunities today in the market. So I'm very, very excited to do some technical analysis. Especially today is going to be very good because I think a lot of my setups are going to play out today. Or at least some of them. So this is what we would like to see. Especially today is going to be very good because I think a lot of my setups are going to play out today. Or at least some of them. So this is what we would like to see. Do you guys have any... Yes, do you guys have any plans? I've been streaming on Twitch, I've been streaming on YouTube at the same time. Just so you know, I just started out on YouTube as well. So let's build out this this channel as well right now. Just so you know, I just started out on YouTube as well. This channel as well right now. Definitely some good setups today, I'm sure. The reason for that is because I've been looking at some setups already for a while right now. And I think we're very close to some climaxes today. And the reason why is because I expect that it will become a little bit more volatile today. It's Friday anyways. Therefore, I think that this is a very, very important moment. So yeah, let's see what happens. Let's see what happens today. I'm very excited. Yeah, so let's get it today, bro. So yeah, the goal is to just build out our YouTube right now, rather than only Twitch. So this is the next step. So yeah. Yes, let's get it today, bro. Yes. Yeah, for sure. On YouTube, the algorithm needs to pick up, but we don't have any. You know, we can take all the time we want. We want to make sure that quality wins over time. So at least this is what I care about. I care about quality and give you guys the right technical analysis and stuff and everything around it. So please ask me anything you want, because I've been grinding for the last 2 or 3 years. Yeah, 2.5 years right now. Every single day. There is nothing else I'm thinking about than charts. This is the only thing I'm thinking about right now. Macroeconomics, technical analysis, charting, currency pairs, crypto. However, I kind of made a transition from crypto towards Forex. So I started out in crypto and then I started to appreciate Forex a lot. So therefore, yeah, this is the reason why I'm right now completely in Forex at the moment. I like the volume. I like the fact that it's just only during the week, not in the weekend. If I see a major opportunity in crypto, I'll take it. But overall, I am right now in Forex just because of these amazing entries you can get. And for the people that are saying that you cannot make more money in Forex as in crypto, you are highly mistaken, my friend. You are highly mistaken. And actually look at the Bitcoin chart right now. Everyone was extremely bullish yesterday. Everyone was extremely bullish yesterday. But if you really think about it, just look at this, right? We're seeing a drop causing a lot of inefficiency. We're seeing a lower high. We're seeing a higher low. We're seeing a lower high. We're seeing a lower low. Then we're seeing a higher high. Then we're seeing a higher low. Then we're seeing a lower high. And then we're seeing a huge drop. It's typical wick-off, guys. Typical wick-off. Again, what do we see right now? A lot of inefficiency. We're seeing a lower high. We're seeing a seeing a higher low. We're seeing a lower high. We're seeing a higher high. We're seeing a higher low. If we do not if we're not able to manage right now to create a higher high, in my opinion, I think we're gonna go straight to the 14K. Right there. It's pretty much identical. It's pretty much identical. So keep that in mind. Keep that in mind. I had a beautiful entry yesterday in GY or GJ. Sorry, my bad. And yeah, pretty much ended here. Exited here. So sniper entry, sniper exit. However, I'm still partially in this trade. I always keep 20% of my trade open, and with this 20%, I actually wanted to see a further downfall. So more about, you know, either this range right here, as there's some liquidity right there, or all the way down here, as there is some major liquidity down here. Look at this equal highs right here and this imbalance right there. You know, I expected definitely something more aggressive. However, it can still happen, right? So take this in consideration right now. We're seeing a retracement, but in general, this is the area we need to look out for. So that is this area right here. This candle right here is the candle where we have to look out for right now. It's pretty much this candle right here, this supply zone right there. So if you do not intend to break, if you fail to break this, I expect another leg down, another test of this demand zone. Let's see if we hold then. Let's see if we hold then. But yeah, at least we got a pretty significant trade yesterday. So that was Sniper entry, sniper exit, like a 4.5 to 1. So that's pretty good. However, I just assume that we're gonna see a further leg down still. That's my opinion. Look at this trend line liquidity build up now also, man. A lot of retail traders are entering here, putting their stop losses right there. So you would assume that price would actually come there one time to just, you know, grab all the stop losses, grab the liquidity, and then move forward, right? Hey, if I'm wrong, tell me. So yeah, that's what I currently think about it right now. Something I would definitely go aggressively is the NAS. And the reason why is because there's a lot of liquidity built right there. Right there as well. We have some imbalance that has not been filled yet. It hasn't touched this supply zone. So there are a lot of early shorters right here in the market. Some longs got trapped here as well. I think these longs are gonna go, they exit for a break even. So they will go out on a break even. And you know, it touches this liquidity, so there are a lot of stop losses here as well at the same time. So, and stop losses, and people are going out for break even. Plus it fills up a little bit of this imbalance. In my opinion, I think that you know, it's an easy trade. I think it's an easy trade. Also this one, look at this one. This is some of the most beautiful trades you would ever see, and the reason why is because we came down, a lot of imbalance right here, right? Inefficiency here, we came back up, we fall back down further, yeah? So causing a lot of imbalance in this range right here, a lot of imbalance in this area. Then we come up, we only want to short above the 50%, above the equilibrium, right? Therefore, we are now in the 62%, and this is the point of control. This is the area of, from this complete range, where the most volume has been traded. So where the most trades has been placed, or the most orders has been placed on average, right? Also, institutions that go in a trade, they trade on averages. So they don't trade, you know, one trade, because they have so much liquidity that you cannot just, you know, place one particular trade. You have to divide your trades to get an average. This is what happens with guys that are very, very big. So then they create an average order, and most of the time the point of control is that average order right there. So this is where the most confluence is happening. And if the point of control then aligns with a supply zone or a FIB level or both, it's a very, very strong, you know, gives a lot of extra confluence to this trade in particular. So right now, therefore, clearly we come back up here, test this area, fill up this imbalance, test this supply zone, mitigate the point of control and the FIB, and then just move further down. That's my prediction, because then you would also create a beautiful, you know, triple, you know, head and shoulders pattern. Right? This is how people view the head and shoulders. We don't look at it the way, oh, we're seeing a head and shoulders getting formed right now. But if you think from a retail perspective, it makes the most sense, right? So you would see a supply zone right here, you would see the point of control right here, the FIB levels. And at the same time, you see a head and shoulders pattern getting created. So this is very, very interesting for a lot of retail traders as well. So you get now also the retail traders on board. So right now the institutional traders and the retail traders are aligning, and this is why it's a high confluence trade, and this is why I would go in aggressively. So yeah, therefore I like this trade setup a lot of EJ. And the euro, let's be honest, the euro doesn't look that strong right now, and I think it's gonna get even a harder time overall. So if you want to look from a news perspective as well, then you could add this as a confluence as well, in my opinion. And if you want to know how effective this is and how you can test if this is even relevant right now, this whole volume range or volume profile, is by checking if already there is some resistance at the, you know, volume area low, which is this area right here, right? And you can clearly see already that it's forming resistance right now as well. So therefore you can see definitely that the point of control will be relevant whenever it breaks through the volume area low. So using the fib levels, supply and demand, imbalances in the market, volume profiles, and then also looking for potential retail patterns like the, you know, head and shoulders. It's a win-win-win-win. So yeah, I'm kind of new to this YouTube streaming, so I always streamed on Twitch before. So we have to start fresh on YouTube. So yeah, right now I'm streaming at both. I kind of like YouTube though. I kind of like YouTube, you know that? It's just new, it's fresh. It's like everyone is going on YouTube these days, you know? Another confluence you can add to the table is if there's liquidity just under a certain zone. So we see, for example, again, a beautiful range, consolidation, followed by expansion right there, causing a lot of inefficiency in the market, right? So actually you have to take it from this last high right here. Then we want to short only from the premium ranges, right? So above the equilibrium, so above the 50%. There is liquidity build up just under this supply zone right here between the 79 and the 70%. This is a high confluence area. We're having an area of imbalance here as well. These are early shorters, right? So these people that went short right here, they putting their stop losses obviously right there, right, as tight as possible, especially already when the price is here right now. A lot of whatever swing traders or whatever, they go in here already short, putting the stop losses right there. So we know there are a lot of stop losses here already. Look at these candles also, these vector candles upwards, right, at the same time. These vector candles upwards induced a lot of people to go long as well at the same time. So we have people that are trapped. We have a lot of early shorters as well in the market. So we have liquidity built here, plus the imbalance here, plus the 75 and 79 fib levels, plus a beautiful, beautiful area of supply, because we saw a drop, base drop right here, causing a lot of inefficiency in the market. And causing also the break of structure right there, right? So in this case, on the S&P, everything adds on as well. So I would go in aggressively here. This counts also for the EJ. This is another example, right? So here, for example, we want to wait for confirmation entry. And the reason why we want to wait for confirmation entry is clearly because this is under the equilibrium, first of all. Second of all, there's a lot of imbalance here that has not been filled yet, right? We have multiple supply zones above it that has not been tested yet. So these are multiple reasons to not go in aggressively here. This is the key difference between going in aggressively or wait for a confirmation entry. There's definitely a little bit of liquidity built here, obviously. But there is so much happening above this zone that you want to wait for confirmation entry. And what you want to do is when it's entering this range, let's say it goes here, right? Let's say it goes up right now, you know, whatever. We go to the Asian session, the London session starting, it starts to pump. Then let's say we reach this target right here. What you want to see is a huge dip. You want to see a huge crash below this area right here, first of all. Breaking structure right here, for example. We call this a change of character right here. Or even here. Right? Breaking the complete structure. Then we come back up into the range. What I normally then do also is I draw the fib on the lower time frame from the top to the bottom of this bounce, because you're always going to see a bounce. And we look if then the fib levels align with, for example, the 88, the 79 or the 70.5. And if I see a beautiful zone there, I just draw the fib right here. And that means that from this moment you will have a whatever, a 5 or 6 pip stop loss right here, which can give you a huge trade. So waiting for a confirmation entry is not bad at all, right? It could actually be more beneficial. However, still, like confluences like these, for example, or the same as the trade that we had yesterday, this trade right here, it's just so easy, you know? You can just literally put the trade hours beforehand, put your take profit already, just wait and just chill. You know, you don't have to think about it, you don't have to look at the chart all the time. This is the key difference between confirmation entries and aggressive entries. It just depends on your type of trading also, you know? You can turn your, 4x or your 4 risk to reward into like a 20 risk to reward if you do it right. I mean, let's see if you can do it. So we entered here. But let's say we didn't enter there, right? And we want to wait for confirmation, right? So we do then literally wait for a break here. And in my opinion, we look for this range right here. This is a very, very important range, because this liquidity was getting built up here. We see clearly that it broke this range right there, right? This was the area right there. Then we look at the last supplier level, right? We take the fib from this range to this range. And we see at least a nice supply zone above the equilibrium. The higher the better it is. But in this case we saw a beautiful range here. And then we go look on the different time frames. And there we go. It tapped into the zone multiple times. Stop loss above it. It's still like a 20 pip in this case, however, this is still smaller. And you would have a 5-to-1. So in this case it would not be even a matter, but you could also go for a re-entry, right? Once you go in aggressively, you can also enter with a re-entry as a second trade, so you can double your margin. In the end, guys, I still believe that this trade has the potential to go even lower. I know it bounced off from this demand zone right now. But look at these equal lows right here. Look at these equal lows at GJ. Look at the liquidity that's built up right here. Equal lows as well. Still some imbalance that needs to be filled up. It's just one bounce we saw right now from this zone. If you come back the second time, most likely it's gonna break it, right? Retail traders then see like a double top formation. Something like this. Could definitely be the case. So yeah, once again, I've been streaming on Twitch. Obviously, I have way more viewers on Twitch, and I'm just starting on YouTube. However, I want to go fully on YouTube. I like YouTube. So yeah, we have to start from ground zero, and I'm fine with that. I expect a lot of volatility today, though. We still have around 1 hour. So what we're looking for right now is an area of pretty much a zone that is reaching a certain area, either a demand zone or a supply zone. So the Asian session can be manipulated by the London session. If you can look for that, that would be great. Let's see if I can find an example. This was the perfect example yesterday. This is the reason why I entered this trade aggressively as well. We had the Asian session here. And the moment the London session opened, keep in mind it was the GBP as well, right? The moment the London session opened, boom, instantly hit the supply zone, manipulated the Asian high, and then came back straight away. So there are so many confluences you can give to your trade. Literally, you can easily go to a... you can get an 80% win rate like that. Really, if you're patient, if you are like picking the right setups, if your whole checklist is just perfect, right? So I can give you a list right now of all the confluences that you can use. So we have liquidity under a supply zone or above a demand zone, number one. We have a break of structure, right? Or a change of character. Very, very important. We have inefficiency, imbalance in the market. Very, very important. It tends to be filled up. We have... did I say liquidity already? I don't know if I said liquidity. Anyways, I say it again. Then we have the Asian session, or the London session, or the New York session. For example, the New York session tends to manipulate the London session. The London session tends to manipulate the Asian session, right? If it then exactly taps into a demand zone around that time frame of the opening, extra confluence as well. Then another layer is the fib levels. Are the fib levels aligning with all the other factors as well? Is it above the equilibrium? Because the equilibrium decides if you can even decide to go in aggressively, or you have to wait for confirmation entry. So is it above the 50%? Then you can decide to go in aggressively, depending on the other factors, obviously. If you just want to wait for, if you're literally under the 50% equilibrium, it's not very profitable. Therefore, you want to wait for confirmation entry to reduce your stop loss and to look for, you know, more confirmation, more security in your trade. So that's the reason for the fib levels. The secret gem, really the secret gem of it all, is in my opinion the volume range profiles. For example, when we're seeing a clear range, especially when you see a clear range, it's very, very effective. So let's see this range right here, for example, right? So we have the 1 hour here. It depends per time frame. Oh shit, I need to change that. Alright. So the point of control is the area where the most volume has been traded. This is where institutions, on average, bought or sold their positions in this range. Because institutions are trading with billions of dollars, right? And the reason for that, they can never use one particular trade and to enter a possibility trade. They have to do it partially, right? They have to add on to their positions because they cannot just enter one big trade. You know, you cannot just enter a multi-billion-dollar trade. I mean, you could, but like it will cost them too much in fees, so it's not worth it. Therefore, you need to step into the market partially, and therefore you get an average entry. And most of the time, the point of control is the average entry of the institution. So this is high confluence right there. If the point of control then aligns with a supply zone or a fib level or something like that, it's a highly confluence trade. So yeah, that's just a thing that I always use. Consolidation ranges are super powerful, especially when you see a range of consolidation followed by a massive expansion, causing a lot of inefficiency in the market. And of course you expect a strong retrace from there, right? We saw already a strong retrace. However, the reason why I want to go in aggressively is because it didn't touch this supply zone right here. It didn't touch this supply zone right here. So this is super valuable. This is super important. So it left, a lot of liquidity right here right now. A lot of stop losses are built right here above it. And I think these are a lot of early shorters in the market that probably will get stopped out. What about gold, guys? Wow, gold is gold is dumping, hey? Okay, I don't think we have to worry about gold though. I think it's gonna be fine. Again, guys, look what happened here, right? This is the AC. So what we're seeing here, right here, we saw, of course, a break of structure, right? We saw a retest, we saw a dump, we saw another entry, we saw a dump, right? In that meantime, liquidity was built here. Equal lows were built here. What happens? Inefficiency was created here from this smaller range right here, right? So first of all, let's have a look on the hourly. A lot of retail traders, they're just drawing this line right here, right? So they're entering right here long. Boom, we fall back down. All the stop losses get hit. All the liquidity underneath gets taken, causing a lot of inefficiency in the market. Left us with an equal low. Then filled up the imbalance here. Come back to this area of supply, right? This is a really small area of supply here. You could enter this perfectly, by the way, because you created a break of structure here also, right? You would enter here. You would put your short there. Stop loss 10 pips. 11 pips right here, if you want to be sure. take profit under this equal low, because we know that there's a lot of liquidity buildup right here, right now. What happens? It comes back down, wicks down very fast, right? So people cannot handle it. Grabs the liquidity from there, and then moves further, creating a higher high. This is how they constantly are looking for liquidity. They build up liquidity in ranges because they make retail traders believe that, you know, we saw a double bottom formation. That's it. So people think, oh, double bottom formation, super strong, reversal incoming, and boom. There is a reversal incoming. However, not before we take liquidity, right? So boom, we take the liquidity, and now the reversal is coming. So yeah, this would have been a nice 8-to-1 ratio. So the number one tip that I learned personally from a mentor of mine is that liquidity is king. Looking for liquidity in the market, constantly looking for, yeah, liquidity, stop losses. This is where the magic happens. Because this is how the market makers are moving price. They need liquidity. They need... Okay, so liquidity. What's the essence of liquidity? It's pretty much instant buy or sell, right? If you put your stop loss there and your stop loss get triggered, you are forced to sell, right? You're forced to sell your position. And when somebody sells, somebody has to buy it from you. But there needs to be liquidity in the market to do so. So therefore, you need these instant buy or sell options in the market, right? Otherwise, there's no liquidity. Otherwise, it's really hard to move price. And therefore, there are liquidity providers. And these liquidity providers are, you know, putting billions of dollars of instant capital into the market. But they control it all. So therefore, they can decide pretty much how to move price. So when then a retail trader steps in, which is 0.00000% of the overall market, you know, when we step into the market, we are fish. We are bait. Therefore, they can decide where price is going towards. And this is the reason why they, you know, let you believe that we saw a double bottom formation right here. But what actually then happens is, you know, double bottom formation, drop, liquidity taken, move forward, and so on and so on. And then they're building new liquidity around ranges and stuff, right? So this could have been a beautiful area of a short opportunity right there. So yeah, what typical liquidity is like, yeah, you know, we have trend line liquidity. We have equal lows, equal highs. Very, very, very good. Very valuable. Again, you see it here, right? Equal highs. Right there. We create a beautiful trend. Retail traders go in here, putting the stop losses right there. Right? What happens? Price dumps, grabs all that liquidity, comes back down, right? Equal highs here, boom, takes the liquidity of these equal highs, then reverses price instantly again. So equal highs, equal lows, trendline liquidity, and ranges of consolidation, right? So that's pretty much, you know, support level, resistance level, and then a range right there in the middle. Building out liquidity at both sides right here. Then taking out the highs, then taking out the lows, and then they do whatever, right? Liquidity on both ends is taken. So yeah, is there any pair you want me to see? Or to check out? Let me know. Again, guys, same thing here right now, right? Clearly. Trendline liquidity right here, right? Retail traders are going in here. Long, 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 long. Going back down, taking out all the stop losses from this range. From the people that entered here, entered here, entered here. All these people are stopped out right now. Leaving a lot of inefficiency in the market, right? You can definitely see it on the higher time frame right here. What happens, or what tends to happen? Price retraces into this range. We wait for confirmation. Let's say this. Then look for a new supply zone right there. So let's say it's right here. On the, you know, something like 70. And then price retraces further down. However, the more liquidity that gets built up here, the higher the confluence. So if we're seeing something like a equal low, then I'm super confident about this trade, right? Because we see retail investors that went in here got stopped out. Perfect. Leaving a lot of inefficiency in the market. Right? Imbalance right there. Perfect. Coming back up. Beautiful area of supply. Perfect. If we draw the fib from here to here, aligns above the equilibrium. Great. Let's say we come in, we wait for confirmation entry in this case, because it's not on, you know, on the higher time frame. We still have some imbalance right here, so we need to make sure that it just not continues going higher. So we do that. Price comes back down, creates a lower high, lower low, comes into the new supply zone, which is then again, you know, at the 79.70 fib. That will be even better, right? And then drops. And what do you see in the higher time frame, guys? Head and shoulders pattern right here. Beautiful head and shoulders pattern. So this is magic. However, it will be even better if equal highs or equal lows are getting created right here. You know, the best case would actually be for me to go in if price comes up, starts to consolidate, create maybe a double top right here, comes back down, and then comes into our supply. That's what gives me the most confidence right there. Because we know that there is a lot of liquidity buildup right here, right? Stop losses right there. Comes back up, filling up this imbalance, stopping everyone out, then comes back down to reverse, creating an overall head and shoulders pattern right here. So I'm definitely adding this one to my list. GU, bro. Okay, let's have a look at GU. Yeah, so I think I mentioned this before, but so first of all, there is some liquidity here, which is a good sign. We have some imbalance right there. We have a break of structure right here as well, right? So this is great. Yeah, this is all aligning. So then we look from the last high to pretty much the last low. Coming back into our range, which is great, above the equilibrium. But we're still looking for a confirmation entry, and the reason why is because there's just so much, you know, untested supply zones above it. That, you know, there's imbalance here. A beautiful area of range of consolidation here, right? So this is actually a very, very important zone we have to take consideration. And look exactly. This is what I explained, right? About these institutions and stuff that go in average. Well, this is exactly what you see here right now. So, consolidation. Consolidation, expansion. Retracement, come back down, right? That's why you wait for confirmation here. Otherwise, it's too risky. Here, I wouldn't go. I would go in aggressively. But you can see clearly that the point of control of this range here is aligning perfectly with the supply zone. So we know that this is the average entry of an institution, right? So whenever it retraces to filling up this imbalance, a lot of volume will tap into the market right there. A lot of volume will tap into the market. A lot of orders were placed around this range. So you will see a lot of resistance there. So confirmation here at the 121. Aggressive at 122.7. Yeah, we can keep going. We have another range here, etc. But you have to understand that it takes a lot of power also for a, you know, a trader like this to, or for institutions to push price up, right? You can get into overbought territory very, very fast. So if the RSI is then above this range, you know, forming some sort of bearish divergence, yeah, you know that you can already enter aggressive here. This is the only indicator I ever use. It's pretty much the RSI. Okay, we use the volume range profile too, and we use, of course, the Asian session range too. But that's pretty much it. So I hope that answers your question. If anyone else wants to see a chart, let me know. Like I said, I'm new to YouTube, guys, so I appreciate the support. I'm a newbie. So we're seeing a rejection of the supply zone right here, but personally I would not even look to enter this position. And the reason why is because it can easily just go higher, right? First of all, the equilibrium, right? We are under the 50%, so it's not even really beneficial to go in. The point of control is above it as well. You know, look at this imbalance here as well at the same time. A lot of imbalance here that needs to get filled on. It tends to get filled before, you know, it's going into like different areas, right? So it tends to get filled up. So I would just look for an area right there. Business Beyond. Nice to meet you, man. Pleasure to meet you. So you're trading GA, okay? I see. Yeah, so this is a typical area of consolidation, right? So a lot of liquidity is getting built up right now above this range. And this is on the daily chart. This is purposefully done, right? So we have a huge area of consolidation right now. Therefore, we have to take consideration that most likely we will see an expansion anytime soon right now. Because they're building out positions right here, right? So people that go long here, they're putting their stop losses right there. People that go short here, putting the stop losses right there. So for sure it's going to come and tap out of this area very, very soon. And when it happens, it's going to reach, or it's going to enter a supply zone right here. Could be this area here, right? So what I personally believe is going to happen, also because there is so much imbalance from this bigger range, we're going to either expand, we're going to you know, see the expansion. So what could happen is two scenarios, right? We can go lower and then just immediately take all the liquidity and just reverse and just, you know, literally come to this area right here, because this is a very, very strong area of supply. However, I have this major resistance level as equilibrium, but still. Or it's gonna, you know, come back down here and then it's already, you know, you can wait for confirmation entry and then look for position. So like, you know, break and then, you know, something like that. What also can happen is that we just break out right now, take the liquidity of this range, tap into this zone, fail to break above it, and then just take out the liquidity down. So that would give you a beautiful stop loss there. I know it's a big stop loss right here, but anyways, it would still give you a 9 to 1. But I would wait for a confirmation entry, and the reason why I would wait for a confirmation entry is because if you take the high to the low, it's under the equilibrium, and therefore yeah, what they say is you want to buy it for a discount, right? You want to enter your position for a discount and sell for a premium, and this is definitely not a premium location. So yeah, you can wait for a confirmation though, because the liquidity buildup isn't really big confluence, and we still have a lot of you know, imbalance right here as well. So overall it could be a good trade, but just wait for a confirmation. And anyways, if you really think about it, this is like a 94 pip stop loss, right? It's really big as well. It's the daily chart. So we can go to the 4 hourly. But this is massive accumulation right here. Keep that in mind. Whenever you see a big range like this, because this is a really big range, right? Most likely, and this is out of my personal experience, we're gonna just crush it and just come back up and test the zone. So many orders are getting filled here right now. So much liquidity gets built. I think we're gonna see either a huge leg up. So yeah, I should be careful with this zone, but it's possible. EG, okay, let's go to EJ. Yeah. So are you in this trade right now, bro? Let me know. Or are you waiting for a position right now? Section Shout Harry. If I say it correctly, I don't know. Nice to meet you, brother, man. I'm also new. I was always on Twitch, and now I'm on YouTube, so I have to start from ground zero. And you asked me if I'm in the EC trade or AC trade. No, I'm not right now. But let's see. So yeah, this is really good. This is good. Great. Pretty good that you show me this actually, because you can clearly see there's a very nice area of consolidation on the 1 hourly. So if you take this range, right, we do the fixed range volume profile from here to here, we see that this is the point of control. So this is the area of a lot of resistance right here. Then we have the volume area low here. You see that the volume area low is causing a lot of resistance also right now, right? This volume area low is aligning perfectly with a beautiful supply zone right here. So it's stepping into the zone and is now rejecting. What happened was like I said, right? I'm not sure if it was this one. Yeah, I think so, yeah. So, retail traders went in here, stop losses here, created equal lows, liquidity underneath, right? All the stop losses were here. What it does is, you know, the inefficiency that was created from, you know, getting the liquidity from the retail traders, come back up again, fill up this imbalance, then come back down, grab the liquidity from all the stop losses right there, and then tapping into the real supply zone of the volume area low, which is the range right here. However, I would be careful with entering this position because it can easily create a new trend right now, right? Who knows? Something like that, stops here, create a higher here, and then just, you know, enter this next range right here. Most likely, we will see a test of the point of control. I see, okay. Great. You entered on the 1 minute, okay. Nice, bro. Hey, Buxworm, how are you doing, man? Nice to meet you. Hope you're having a great day. Great example of this one, for example. Supply zone right here. Clear rejection of the zone, right? If you take the high to the low, above the equilibrium. Some liquidity getting built up here. Like a little bit. That's good. A lot of imbalance in this range, right? Look at this massive pump right here, causing a lot of inefficiency in the market, especially in this area right here, under the liquidity. So what tends to happen is price enters a supply zone above the equilibrium, then come back down to at least cover up and to just cover this liquidity right here. Testing, in my opinion, this resistance, this area of support. And again, on the higher time frame, we could see some sort of, you know, bearish pattern. So, I'm a day trader. I call myself a day trader, not a swing trader. But what I do is I look on 4-hour time frame, 1 hour, 30 minute. I look for areas of supply, a lot of confluences together and liquidity build up in a particular range. Then most of the time when it reaches that zone, I go down to the 5 minute, 15 minute or 1 minute chart. And then I look for potential entry. So pretty much when we saw this happening right here, we saw a break of structure right here on the 1 minute. I'm looking for a nice area of, you know, supply on the 1 minute, which was in my opinion this one right here. So what it did, it came back in, reaches this area of supply and then dumped further, creating a new lower low. And then from this moment I would just enter here, stop loss right there, 5 pip stop loss. Then I go on the higher time frame again to look for potential targets. You know, pretty much this is a huge trade. This is a really big trade because there's a lot of liquidity build up right here. Trendline liquidity from retail investors as well. So if I would draw the fib, I could even take profit here already. But this is already a 20 risk reward ratio, so I would already go enter and then sell 50% of my position and leave the rest for the higher time frame, which is then, of course, the liquidity and the area right here. So I would say I'm a day trader. But yeah, my positions are maximum a few days. Max. I prefer shorter trades too, but I'm definitely not a scalper. So yeah, London opens soon, guys. I'm very excited to see some volume, especially for this one right here, the one that you showed me before. Because I think that we're gonna see a lot of volume coming into this one right now. Like a lot of volume. So much liquidity build up here. When the London opens, you will see a lot of volume coming into the market, probably breaking these highs. So let's keep a strong eye on GA. Thanks for sharing, bro. I'll have a look at this one. Okay, I'm not sure if you guys are trading crypto, but I think crypto is gonna go lower. That's my personal belief. There is some news about a lot of new Bitcoin coming into supply because of an exchange, like 150,000 Bitcoin. I think people want to sell that. But the main reason, just looking at TA, it's just very, very clear, right? We're seeing exactly the same thing happening. It's like, it's almost scary how similar it is. Look at this, right? We dropped, causing a lot of inefficiency in the market. We created a lower high. We created a higher low. We created a higher high. We created a higher low. We created a lower high and then dropped. Typical wick off, right? Again, massive imbalance. We created a lower high. We created a lower low. We created a lower high. We created a higher low. We created a higher high. We created a higher low. We created a maybe lower high. And then a huge drop. I mean, history doesn't repeat itself exactly as it is, but it definitely rhymes. And it's very, very similar to me. So, and people were super bullish about Bitcoin yesterday. I saw it on Twitter again. People were like, wow, massive pump yesterday. I think they meant this pump right here. But if you look at from on the higher time frame, it doesn't look that good. So yeah, that's Bitcoin. A lot of people still trade Bitcoin also in Forex, right? So okay, let's have a look at some indexes also. So the DXY, the DXY is pretty much unstoppable, right? We all know that. So looking at the weekly right here, we see a clear pattern right here getting formed. If we would draw that, and this is basic TA, right? We could just put it above this area range. There is still a long way to go for the XY right now. This is like a 5-year range getting broken right now. Keep that in mind. So yeah, I think this is something to take into consideration. So yeah, the DXY is very, very powerful, very strong right now. So be careful with USD pairs. I mean, look at the euro though. The euro is getting destroyed. So the euro currency indexes. I recommend you guys to all add these indexes to the list. Because it's super easy to understand what exactly, you know, the indexes are doing. Also more confluence to your trades. However, the euro is just, man. Actually, I want to see this right now, man. €1 to USD. To USD news. Man, this is insane. Breaking. Euro USD breaks below parity for the first time since 2002. Okay, so I come from the Netherlands, right? I'm Dutch. So I grew up with the euro. And I think we changed from the gulden, which was the Dutch currency before, to the euro when I was around, I think 6 years old, 5 or 6 years old. And first of all, everyone was, you know, got trapped already. And the reason why is because at that time, when we had to switch from gulden to euro, 1 or 2.2 gulden was €1. That was the balance sheet of the euro towards the gulden, the old currency. And what people in the stores did, they literally, you know, when something was 1 gulden in the store, like a product, all the retail stores just changed it to €1. So instantly, everything became 50% more expensive. So yeah, that's a story of how we got trapped with the euro. And we lost a lot of buying power. And I remember it was a big thing. Even when I was this small, I remember it was a very, very big thing. But at that time, the euro went up to like $1.60, you know. So right now, I think actually we're going to see a lower, like a euro that's getting, you know, less strong than the dollar. I think it's going to be like, yeah, it's not looking good, guys. It's not looking good. So maybe we're going to see something like a 95-cent euro. It will be insane. Where are you guys from? I'm very curious to where you guys are from. How long are you trading for? I started trading around about, I think around 4 years ago. So I started with crypto in 2016-17, pretty much that bull run. And obviously I lost all my money. like everyone else, right? But I became obsessed with trading. I thought trading was so cool, and I never knew, understood how powerful technical analyzers were. And you know, it's like a game, and I was always like playing poker or like these type of things as well. So I love probability, and trading is a probability game. So it was a no-brainer for me to just go into the market and just to try to learn as much as possible about trading. But I became very serious about trading around about 2 years ago. And that means every single day, you know, learning, 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 learning. And trust me, I made all the mistakes you could make. Literally all the mistakes along the way you could make. Nice, bro. You're from the US. Great. Yeah, I'm Dutch. I'm originally from Amsterdam. But right now I'm living in Indonesia. So it's super weird with timing, man. I live in Indonesia right now, right? So when the New York opens, it's already evening. Okay, guys. London is opening soon, so we're gonna see some volatility right now. There we go. We're gonna see manipulation of the low. And we also want to see GA as well. Okay, nothing crazy yet. There we go. GJ. Keep in mind, a lot of liquidity down here, guys. Right in this range right here. Right here. Imbalance right here. Right? It makes a lot of sense for GJ to go down right now. Tapping into this zone. Covering the liquidity from this range right here. Filling up this imbalance. Tapping into the supply. And now coming back down. So that's why I entered here. So we have a current live trade right now right here. I went in aggressively here. So pretty much had a stop loss of around 20 and then come back down right there. So yeah, it makes a lot of sense right now to just break through the zone to grab this liquidity right here. Maybe come back down. Yeah, definitely. I'm looking for sells. I'm already in a position right now for GJ. I went in aggressively, so it was pretty much a sniper entry. However, I'm definitely gonna look for any re-entries right now. But what I want to see is that this demand zone getting broken first. So we have the Asian session right now. We're seeing the London session, of course, opening. Manipulating the Asian low. The question right now is, are we going to update this low right here and come under this demand zone? If we do, then I re-entry. Then I re-enter right here. Stop loss right there. And then, no, liquidity underneath this pool of liquidity right here. Maybe even tapping into this area of imbalance as a re-entry. But only when we heavily come back down. So when we move under this low, under this level right here, at least. So let's say we come back down right now, we wick down, creating enough weakness, coming back up, of course, to retest this zone. Area of demand turns into an area of supply, and then come back down. This will be my re-entry for GJ. And there we go, London opening, guys. Volume increasing. Yeah, nice to meet you, man. I hope to see you in more of my streams. I'm gonna stream now on a daily basis. I was always on Twitch, and now I'm on YouTube, so I have to start again. So yeah, if I can help you with anything, let me know. Okay, I'm gonna come back to GJ real quick. I just want to go over the other wells right now. I want to see how the volume is increasing in other pairs as well, especially G pairs right here. So, of course, again, guys, look at this perfect example, right? What do we see here? Liquidity. Equal lows, right? When equal lows are created, it tends to break the liquidity to at least go for a stop loss hunt right here, entering this range right here. If you then take the range profile from this range right here, we could see a bounce from this range perfectly. So we come back here, take this liquidity from these stop losses, and then move further. Or go even lower to fill up here, to look for areas right there. However, this is a pretty significant range, creating a higher high. So I suggest, or I expect, a lot of support from this area though. So yeah, keep that in mind. So yeah, manipulation of the Asian low today for G pairs right now. Of course. So yeah, GJ, of course. Let's see what happens here. I'm definitely looking for a re-entry right now in GJ. Area of supply getting created. But we need to see a lower, a break of structure here. So if we tap into this demand zone again, preferably we want to see at least a lower low, At least coming back down, to then maybe come back up, to then maybe come back down more, to then maybe come back up, and to then really go for a clear rejection right here, to grab this liquidity right here. Something like that. It would make sense because we're seeing then also clear, weakness, wick off, and a triple top. Thank you for watching, guys. I very appreciate it. You know that, because like I was always streaming on other platforms, and now I'm on YouTube, and I really like, this is my first my fourth stream or something. So thank you for watching, and please let me know if I can help you with anything. So yeah, possible re-entry for GJ right now. I think we're gonna dump. Yeah, look at this. So much liquidity here. Okay, there we go, guys. London open. manipulating the low, tapping into demand right now. The question is, are we gonna hold here? Let's see. Okay, I'm back in 1 minute. And when I come back, I want to see a massive dump. Okay, what happened? Alright, so demand zone is holding right now, right? So manipulation of the Asian low. What do we see here? Liquidity, equal lows. So people went long, creating a higher high, making people believe that we're going to go higher, inducing people to go long here as well, trapping them to then reverse price to take out the liquidity when the London session opened. You see? It's exactly the lows of the Asian range. So that had to be taken out. So that was an easy trade. If you are a scalper or like, it was an easy trade. So right now we did that, right? We took out the liquidity there. So now we are entering this demand zone and we're actually bouncing from it. But what I would like to see is actually that we create a lower low, break structure here now, even if it's just a wick, then come back up in this range, maybe test this, you know, drop base drop area, providing us with a supply zone right here, then come back down again to then completely just, you know, go through this demand zone to then eventually at least wick down under this area, taking out this liquidity already, to then come back up. This demand then turns into a supply, to then look for lower targets. And that would complete our overall pattern right here of like, you know, triple top with retest. So a lot of retail traders would go in again also at the same time. So these are the moments where sometimes institutions and retail traders are aligning, are agreeing about the same area. And pretty much what they do is they make other retail traders battling against other traders as well, right? Other retail traders. So there are a lot of people that went in here long here and long here, right? Putting the stop losses right there. So they're using other retail traders to make sure that the stop losses will get taken out of these retail traders as well. It's a battlefield, guys. It's a battlefield. Full of manipulation. And what we do, we're just gonna put a few buckets underneath, you know? That's all we do. Put a few buckets of gold underneath, waiting it to rain. Rain gold, and that's it. And we're gone. Okay, we're gonna see retracement. Let's see how high it comes here. We have two zones I'm looking at right now. It's either this one or this one. Also here, keep in mind, we still have this area here of liquidity that has not been touched yet. So this supply zone has never been tested. So yeah, many possibilities right now. We cannot, you know, we're no magicians, right? We cannot see where the price is going. However, if it does something, we know how to react. So that's the most important. But still, I'm in my short right now from here. Putting my stop loss on break even, that's for sure already right now. Because there's a nice supply zone here. Liquidity build up underneath, so it could come here also and then just move further down. Let's see what it does. Wow. A lot of long people that went long here got induced to go long, and then massive squeeze. So I'm very looking forward to this trade. Again, we didn't create a lower low here, so we can just easily come back into this area right now, taking out all the liquidity from above this area right here. Do you guys have any other pairs I need to look at? Let me know. We call this the naked point of control. The area where the most volume has been traded in that specific range. It's one of the most powerful tools for my trading. Is there any news coming out today? I want to see that as well. I don't really trade news, by the way. I do not trade news. However, you need to know if your pairs are, if something is coming out, because you can get wrecked very, very easily if you just don't pay attention to this. If you're putting a trade exactly at the time that some major news comes out and you do not know about that news, then, something can happen, right? So we only have, the euro, Canadian dollar, USD, of course. Nothing crazy today. Do you guys trade any smart money concept or ICT or something like that? Yeah, bro. So if I trade indices, so yeah, I trade some of the indices right here. So do you have the NAS, which I'm looking forward to at all. I like to trade the S&P, very similar to the NAS, obviously. US 30, again, very similar. However, for the US 30, I don't. We need a bit more time. So like, you see an area of consolidation range right here. This area right here. Very, very important zone. Causing this break of structure right here. Then we're coming back up. We're going to the lower time frame. We have a massive zone right here as well. Again, it's not looking that strong. Retested this zone. Creating a new structure break again. So yeah, you can place. I'm looking for some long, like shorter time frame trades right here on the Dow Jones. But overall, I think for more confluence and for a very, very big trade, I would look and wait for it to come up a little bit more. So much imbalance right here. It can easily just turn, right? And then just make a major move upwards as well. For the NAS and for the S&P, I am more confident right now. especially for the yeah, both of them actually, for the US 100 and the US 500 right now. I trade order blocks zone to zone with RSI confluence, mostly scalping through 1 minute. Okay. So when do you take profit? And where's your stop loss? Just above the order block, your stop loss, I guess. But like, you take profit. Where? How do you determine your take profit zone? Okay, I need to add this, man. 5, 1. Again, we see clear support from this demand zone on GJ right now. It makes sense because this is, of course, a very strong area of support. We knew that because we created a massive higher high here. But that means if we come back down right now under the zone, this will be massive resistance. Easy trade. Easy trade from there. I would definitely put a position right there, stop loss just above it. That's great, bro. That's what I do as well. Before I always looking at other guys to look at the trade ideas, it's always good to look at others to just give you a better perspective, overall perspective of how they think. You always miss out on something, you know? It doesn't matter how good you are. It's very hard to always find these perfect opportunities, right? So yeah, it makes a lot of sense. So yeah, let's see if we can find something else. So again, the main thing that I'm doing is looking for ranges of consolidation and then a break of this range. So like, we broke out of this range right here. We came back down. We caused inefficiency right here, imbalance in the market. You know, this is a gap. We call this a gap. So if we have, let's say, we have a range. We see a candle right here. Then we see a massive vector. And then we have another candle right here. Right now. And this candle, yeah, I'm not a good drawer, but anyways. We have a candle right here. We have a candle right there, right? And this wick is not covering this wick. That means that there is a gap. And this area of imbalance is super important, but because it tends to get filled up. So what you see here again is the best perfect example. You see clearly that we broke out of this area, right? Creating that break of structure right here. So we can use this as a break of structure. What happens then is simple. We come back up to literally just fill up the imbalance and to then move further down. Right? So we have this area of supply. And boom, what happened? We tapped into that area of supply, mitigated the supply zone, and then moved price further down. And that's it. And if you just then, you know, take a short here, stop loss above it. Oh no, I have to be honest. This is the zone right here. Stop loss above this. Okay, you have a 23.5 stop loss, whatever. But you could have go out. Let's see on the lower time frame. Yeah, you could have get a 6-to-1. Like just under this range right here, I would say. So like a nice 6-to-1 trade. And this is just by looking at a consolidation range, a break of that consolidation range right here. Then waiting for a retracement to fill up the imbalance to then move price further down. If you then use the fixed range volume profile, we see that the volume area low aligned perfectly with a supply zone. So that's pretty much the base technique of the trade, right? I mean, the question then is like, are you entering aggressively or waiting for a confirmation entry? And that then depends on the equilibrium on the higher time frame. So for example, when we are going from the top to the bottom, I'll take this complete swing high to swing low. Some people say you have to do this one. I'll take it just from the top. I just look, the only thing I'm looking, is it above the 50% or not? In the end, for this one, it doesn't even matter. But it's under the 50%, so it's under the equilibrium. Therefore, it's not recommended to go in aggressively. So then you want to wait for confirmation. So whenever you see a range of consolidation on the lower time frame, and it taps into this area, you want to see an area of confirmation, right? So let's say we're on the 50-minute right now, and what do we see? The perfect confirmation. So we came back into this range, we created a lower low, we created a change of character right here, change of character right here, right? We tapped into the supply zone of this new zone that was created perfectly, right? Look at this. Tapped into the zone. Now you have your confirmation entry. Sniper. So now you went from 29 pips to 13 pips right here. Target the same area, just under this area, small area of liquidity right here. And you would have an 8-to-1 now. 8.5-to-1. Right? Yeah, okay, it could be lower, but you've never called the top, right? Or the bottom. So right now you have an 8-to-1. So now what you could have done is wait for the confirmation, enter here perfectly, and would have a sniper entry right here because you saw this change of character on the lower time frame. So you saw that it tapped into this area of supply because it had to fill up this imbalance. Then you look at the lower time frame to wait for a confirmation of a break of structure or a change of character right here. If you want to look on the lower time frame, for example, you can also say that, for example, there were a lot of stop losses here built because of retail investors going in here. And then from this range right here, we came back up, tapped into this area of supply, and then dumped hard. And then whatever happens after, it doesn't matter anymore. You're out. You're out already. You have your beautiful trade, and then it goes up. Obviously to take out the liquidity here, etc. But that's none of your business. So things can happen very, very fast right here, right? So yeah, the base foundation is looking for areas of consolidation. Again, same thing here, right? It's pretty much the same thing that we saw here for GJ. Area of consolidation, drop, breaking structure, right here. We came back into this area to fill up this imbalance, immediately got rejected, and then dropped further low, creating another lower low right now. Then again, we came back up to an area of supply, immediately got rejected, and that's it. So that's how you can view, how you can look for trade opportunities, in my opinion. Is this an area of, you know, look at this now, in this case right now. Can you go in aggressively? In my opinion, you could have. You could have gone in aggressively here. Because you see clearly that it's above the equilibrium of this complete range. Beautiful trade, by the way. Beautiful trade. So if you then look on the lower time frames right now on the 1 hour, created a lower low, came back up, tapped into this area of supply now, and then came back down again, right? But the main reason why I entered again is not because of that. The main reason is because of the liquidity got built up right here, around this range. Right here as well. A lot of equal lows, you know? Equal low, equal low, equal low. And then I'll imbalance here. Tapping into this area of demand. So let's see what it does. Anyways, the trade is on break even. Wow, this looks super choppy to me. For example, let's say we're here, right? We're seeing an area of consolidation here. We tapped out of this area, right? With a wick, that's it. That's all it needs. 2 tiny wicks right here. That confirms our supply zone right here, right? Boom. That's it. This is where it ends. We tapped out of this break of structure right here, or out of this area of consolidation. Tapped into the supply and dropped further below. Then came back up again. Tapped into the other area of supply on the lower time frame. Right here. Came back. Tapped into this range. Filled up any imbalances, any inefficiency in the market. And then came back down. And there we are right now. So right now we didn't create a lower low yet, right? So there is nothing to look out for right now. Once we're creating a lower low, potentially this could be the new area of supply. And you could have done, you know, like 1, 2, 3 trades then already. So yeah, that's a very good way of like getting multiple entries for your position while keeping your risk as tight as possible. But you can build out your lot size very hard. So if you would say that you just start out trading and you don't have that much capital, then you can make these tiny lot size trades, but you can re-enter multiple occasions. So once you have one good trade, you can look for again structure, break in structure formations, and then go in again once again and re-enter 3 or 4 times. I remember one time it was I don't know what it was again. What was it? I think it was like you cut, like you see, and I had 8 re-entries. I had 8 re-entries, successful re-entries from one trade. I had 1 aggressive entry, and then I had 7 confirmation entries after that. Constantly breaking structure, constantly coming back into a supply. And I kept doing it until I got stopped out of my final trade, and then I stopped. So the moment I get stopped out, I just stopped completely. And then from this moment, we saw a change of dynamic and we saw a change of trend as well. And then everything just turned out the other way around. So re-entries are super powerful. And what I see with a lot of traders, and this is something that I had before as well. Whenever I went into a trade and I had a winning trade, I was comfortable, right? I was comfortable. And I was like, you know, I don't need re-entries. Like I was comfortable. I was like, okay, I'm in profit, all good. I don't want to lose my profit. So something in my mind told me like, hey, I don't want to go into another trade, take another risk to then go into the re-entry to then, you know, maybe get stopped out of the re-entry so I make less profits of my first trade. No. Whenever you see a break of structure, force yourself to go in again and to look for re-entries over and over and over again. This is what gives you the long term, what gives you these like compounded profits over time, is by looking at re-entries. So never get comfortable in trading. Don't get used to comfort in trading, because this is what screwed me over, to be honest, a lot. Like I had very, very good trades, but the moment I had a perfect trade and I was in profit and I was just putting it on break even, I became lazy. I was like, okay, I'm gonna wait now, chill. You know, I don't need another trade. No. Like I analyzed my trades and I was like, wow, I literally just missed out on like 10 other entries, right? Okay, I'm overreacting right now, but at least like a few re-entries after that trade that I took. But because I was lazy, I didn't take it. And it were the same exact principles every single time. So yeah, that's a very good reminder for me that I'm always looking for re-entries right now in every single scenario. So keep in mind, guys, that this area, even though you don't really see it, like it's an area of consolidation. You see? So like area of consolidation right here, even though it's here, we came out of this area, created this imbalance, and right now it seems that we're going to tap into this area to fill up the imbalance and then to move further down. It aligns perfectly. This imbalance here, the 70 fib, the supply zone, the point of control. So I would definitely look for potential short opportunities right here. So EJ is definitely a trade I'm looking out for right now. We broke structure here, right? We tapped into the supply zone right now. Right now we're getting a lot of short pressure. If you look here, this is actually a 5-minute area of supply. So yeah, you can clearly see that again, area of consolidation on the lower time frame, break and then come back into this area of supply. However, the only exception I would make always is if there is liquidity above that area. And what I see here, clearly we created these equal lows right here, equal highs right here. So this could be an area of liquidity where they want to go to move, or at least to capitulate on these stop losses right here, to then tap into the supplies and to then move further down. It could be the case. So this is the only exception I would make. Even though you see a break of structure, if there is a pool of liquidity just above it, equal lows, equal highs, trend line liquidity, then I would be careful. But let's see if it holds. It could easily go for this liquidity run right here and then come back down. But let's see, I'm curious. Okay, right now I put my stop loss in profit. Just in case, above this zone right here. Because most of the time it just takes the liquidity and then comes back down. You see, it wants to go, right? It wants to go. Exactly, yeah, there are multiple zones right here. You have one here as well. Untested area of supply. We have a tested area of supply, untested area. I always prefer untested area, so. But it could easily just smash through just to get this liquidity right here from this range to then come back down. But this is the only exception I would make. But right now it seems like we're rejecting. Consolidation, expansion, retracement, confirmation. Let's see what it does, guys. Let's follow it. Look at RSI. These are the 5 pip stop losses, right? But I didn't take this trade purposefully because of this area of liquidity right there. Thank you for watching the stream, guys. For you guys that are just watching right now, I'm normally streaming on Twitch. So yeah, I'm completely new on YouTube right now. So I appreciate every single like, all the support. Would love to see you guys another time as well. By the way, if you guys you can give me anything. Ask me any question about trading, about charting, about TA, about whatever strategy you're using. And I'll try to analyze the charts. Okay. I'm gonna do a poll right now. Are we gonna pump or dump? 1 second. Yes, I'm gonna be here every day. So yeah, for sure. I was already streaming on another platform, so right now I'm gonna be here every single day, at least 5 days a week, because I'm doing this anyway. So why wouldn't I just stream it at the same time, right? And trying to, you know, show you guys what I'm doing. I've been trading for the last 5 years right now. And I've been seriously trading for the last 2 years with one particular strategy. But it's not just one standard strategy. It's pretty much a strategy. I call it a hybrid strategy. So it's something that I've, you know, kind of tweaked a little bit. I used the smart money concept strategy and I tweaked it with my own parameters. So I had a few other preferences. One of them is definitely the fixed range volume profiles. So I look a lot at volume as well, and a few other, you know, patterns, and wake off here and there as well. I'm right now in a GJ sell on the higher time frame, like on the 1 hourly. My entry was right here. And I'm targeting this area of liquidity right here in this imbalance here. And I'm looking for a re-entry. However, right now there is a lot of liquidity buildup right here in this demand, in this supply zone right here. But if you look on the lower time frame, we saw a break, right? And now it's stepping into this area of supply on the 5-minute. So it could definitely, you know, come back down again. But I would not take personally, I would not go for a re-entry right here. Liquidity concept is awesome. Please make more strategy video. Yeah, man, for sure. I will start uploading actually videos as well. Yeah, liquidity is king. Liquidity is everything. This is what is used the most. So this is the first thing I look at charts. I don't look at, you know, where are we at in the pricing or what kind of patterns do I see. No, I look at, are there any areas of liquidity above price or under price? And if I see liquidity, then I look for potential supply or demand zones above or under that area of liquidity, in combination with imbalances, in combination with the Fibonacci, the point of control, volume area low, volume area high, these type of things. If they are all aligning with each other, the more confluences we build, the better it is, from higher time frame to lower time frame. I mean, it looks like it's rejecting, but my honest opinion. Okay, we're creating weakness. We're creating weakness right now. %75% says pump. To be honest, I would say pump too. Just because of this area of liquidity right here and this not unmitigated area of supply. However, I'm not a magician. It could easily get rejected right here. If I would not see this area of liquidity, I would go for a re-entry short here. For sure. The reason why is clearly because we're seeing a beautiful pool of consolidation. We saw this break. We saw a lot of imbalance getting created. Right there. It's a little bit higher, right there. Price came back to mitigate the supply zone, fill up this imbalance, and then drop further. It makes sense. But sometimes when there's a lot of liquidity above it, it tends to just go through. And then to just like, you know, break this area completely. And then maybe turn around. So I was on your side, guys. I would say pump too. Because of that reason. I actually hope we just massively pump right now. To show you how powerful liquidity is. Keep in mind, retail traders are going long here. Right? Every time we see a confirmation of this trend line, they go long. Where are they putting their stop losses? Of course, right here, right? So what could happen is that we just go there to this pool of supply, to then break, gather some stop losses, come back down, maybe fill up this imbalance right here, and to then come back down. If we fall back down here and we come under this line that I drew here right now, then definitely I would re-enter right here already. And then target this area of supply. Demand, my bad. You know, something like that. So like, if we break lower than this pink line right here, purple line, then I would go in right there, because this area of demand turns into a strong area of supply just because of the support, previous support. Okay, it seems like we're rejecting Ghana right now. You know what? I'll show you guys one of my challenges. I did an Ftmo challenge. Just on the side note, I normally trade only with my own capital. I actually worked for a hedge fund before as well, and we managed a lot of capital there. However, I stopped there, and right now I was like, okay, I'm just gonna try some of these Ftmo challenges or some of these funded trader programs. So let me show you one of my challenges I did right now, and that's purely based on this strategy. I have to admit, it was quite choppy, and the reason why is because you get pressured, right? You need to make a certain target within a certain amount of time, so you have to perform, right? Therefore, you know, you wanna do it fast, you wanna do it as soon as possible, and that kind of stuff. So therefore, this was my challenge. So pretty much, I passed the challenge in 13 trading days. The profit target was 10%, so 20,000. And it was super choppy because of that. You know, the pressure, etc. You need to perform, you have to do it fast. So, yeah, I took trades that I should not take, right, in general. I took trades that I shouldn't have taken. That's why I went up, I went down. I went up, I went down. I went up, I went down. Then I reprogrammed my mind and I said, no, right now I'm only gonna take the trades that I want to take, patiently wait, and do exactly what I'm trying to show you guys. Yeah, which is just, you know, going in aggressive when you have all the confluences with you, and going for confirmation entries when you don't have all these confluences with you right now, right? Mainly the equilibrium and the Fibonacci. And in the end, I switched my mind and boom, we went up straight away. It took 13 trading days. And, you know, we really switched it up right here. We went into, you know, that quick mindset towards, like, you know, serious, like, focus and, you know, being profitable, consistent on a daily basis. And the win rate is higher. It's not correct. The reason why is I had a lot of break-even trades as well that went to slight profit, slight loss, like a $20 loss, whatever it is, and then it counts as a loss, right? So yeah. Overall, pretty decent, but could have done it way better, to be honest. But it's not that hard. It's not that hard. If you're focused and your patience is very, very high, and you know exactly what you want to do, then yeah, easily reachable for everyone. No, I do not have a Discord channel, bro. Who knows? Who knows? I'm gonna be live every day, so I'm gonna be here for you guys no matter what, so we can discuss everything. But yeah, maybe over time, when we grow a little bit bigger and when there are more people, then yeah, let's see what we can do. I would always give it for free. I would never ask for any money whatsoever. I have my own money. I'm completely fine. And I like to give, you know. I like to just give and share. So I will never ask for any money. But yeah, maybe it's a good idea to later just create it and share my charts in there live and some updates when I'm not live, for example. Okay, clear rejection, guys. But it wants to go. I feel it wants to go. Looks like the US 30 chart during COVID. Yeah, yeah, right? Yeah, thank you, bro. But yeah, completely. Actually, yes, completely. So yeah, I'm gonna do another challenge soon. And what I'm planning to do is to do this completely live also. And to literally show every single trade. And then also the Ftmo challenge. So you would literally see everything I do, right? So yeah. Overall, guys, my opinion is that we're gonna go down over the next couple of hours. But the question is, where are we landing? So where are we actually, you know, gonna reverse completely? It could be right now. However, the reason why is just because of the London session. Like if we would go up right now massively today, we would have seen that with the Asian manipulation already. We would have manipulated the high at the beginning to then, you know. I mean, it's a lot of confluence right here though. Liquidity right here. Supply zone that has not been mitigated yet. The Asian high. Manipulate the low, then manipulate the high, and then come back down again. Could be. However, if you would have really pumped right hard right now, I expected already a major pump during the London session. Or the London opening. So yes, pretty good guys, pretty good. Oh, after all right now. Let's take this range right here. Look what you see. The point of control, right? The point of control aligns with... Actually want to see something crazy? Check this right now. This is the point of control of this 5-minute consolidation range. We came back down. Is this a sniper or is this a sniper entry? You tell me. Look at this. It can still break, obviously, but look at this initial entry right here. This is the power of volume range profiles. And I see this all the time. I have seen this on the 4 hour, on the 1 hour, on the 30 minute, on the 5 minute, on the 1 minute. Like it tapped it perfectly right here. So let's see if we break this range right now. Because I see some accumulation. I think it wants to go. It wants to go to this range right here, to this area of supply. But just to give you guys a perspective right now of the point of control and this whole way of charting, and then using the fixed range volume profile. This is a sniper. This is a true sniper entry. And this is because volume is king. Volume and liquidity is king, but mainly the volume indicates where a lot of orders have been placed overall. And when institutions enter, they can never enter in one position. They need multiple positions to enter and then to average down towards a single entry right now. If you go in here and you go in here, then your average entry is here. And this is why it tapped in right into this area. So yeah, that's the power of the point of control. So 57% of you guys have pump. Maybe you're right. I agree. However, we see a lot of shorting pressure right now from this range of consolidation. So you draw the pretty much when the moment you create your first low towards the break of this range, this is when you draw the volume range profile. Oh wow. And the 164.6. Yeah, I see what you mean. So, for sure, definitely an unmitigated area of supply. 100%. However, keep in mind that you have to think for supply and demand as in areas, right? So, we have rally-based rally, we have drop-based drop, we have rally-based drop, and we have drop-based rally. Right here. We're seeing a rally, we're seeing a base, and we're seeing a drop. Right? And let's look at this low, for example. It did not break this low. You see that? So that's why, yeah, it's definitely an area of supply. However, it's not my first choice. Right? Look at this, for example. We see a clear rally, base, drop. Massive drop. Therefore, yes, this aligns perfectly with an area of supply. It also aligned perfectly with the point of control right here. Literally, if you would enter it here, let's forget about spread and everything, right? But you would nail your entry on the dot. It could not be more perfect. That's how powerful volume profiles are. And I've never really seen people talking about it when they talk about smart money concepts. So, yeah. So again, just to give you guys more understanding, right? So we have rally, base, drop. We have a drop, base, well, let me do it here. We have a drop, base, rally. We have a drop, base, drop. And we have a rally, base, rally. Right? So, these are two reversal patterns. These ones. And these are two continuation patterns. Right? In the base, we're looking for zones. So for example, this could be a, I need to make sure that this could be a nice supply zone. This could be a nice demand zone. Right here. This will be a nice demand zone, of course. And this will be a nice supply zone, right? Whenever you trade, for example, you looked at 164.6, right? So let's say you're around this range right here. Right now we are a rally. We created a base. And we created a drop. But this drop is, you know, there are so many things in between that. You cannot really count that, right? So even if you take it from here, a rally, base, drop. But the drop is not lower than the rally. Than the initial rally. And therefore, in this case, this is a clear rally, base, drop. Right? This is the area of supply. We came in it perfectly. And now we're getting a rejection from it. So this is exactly what you see here. We saw a rally, base, drop. We came back into this area of supply and now we're getting a rejection from it. And the reason why this worked even better is because we saw an area of consolidation here as well at the same time. So this is how it works, and this is where you have to look out for when you're looking for supply and demand zones. Look at areas of supply and areas of demand by these two continuation patterns, two reversal patterns. Again, rally based drop, drop based rally are reversal patterns. And the drop based drop and the rally based rally are the continuation patterns. So again, areas of demand, right here we come in, boom. Tap into this area. Come in, tap into this area. Come here, tap into this area. And so on and so on. So yeah, that's pretty much it. That's pretty much how we trade. There we go. Yes, correct. My bullish candle is just white-ish. No, I'm not only trading GJ right now. Or at this particular moment, yes, I'm only trading GJ, but in general, I trade everything, of course. Nice to meet you, John, by the way. Very pleasure to have you here. This is my first time, my fourth stream on YouTube. So I'm completely new. I was always streaming on different platforms. So I have to start from the bottom right now. So yeah, good to have you here. Same for you, Miguel. Pleasure meeting you, man. So, okay, we saw a beautiful area of a rejection. Apparently, it did not want to take this area. However, we now entered our retail trading trend line right here, right? This is our retail trend line. This is where retailers go into the market. Let me remove this real quick. This is where retailers went into the market. And they left a ton of liquidity here. Equal lows, equal lows, equal lows. Most of the time when you see that, the market makers want it. They want to grab it. They really want to go for that. And the reason why is because they just don't want to leave any, you know, easy targets right there. Right? That's it. a lot of imbalance here as well. So this whole gap needs to be filled. You know, a lot of different things. What is your entry time frame? So literally I start on I use the 4 hourly the most. Once it enters a certain range, I go down all the way to the 1 minute. So my entry varies from the 4 hour to the 1 minute. When I go in aggressively, for example right here, I went in aggressively before. I closed my position already. But I had this target right here and I went in until this wick. It didn't reach it, but when I saw the reversal, I exited roundabout right here. So I had like a 13 to 1. So this is on the 4 hour, right? But this was because I saw a clear structure break. It was above the equilibrium of this area. So I was very confident about, you know, entering aggressively. But then, for this second trade, I went in, you know, a bit later. So I wanted to see a confirmation. So I waited for it to top this area. Then, what we see is we saw a break of structure on the 50-minute right now. So we saw that tapping into this area. We saw a lower low getting created. Then, eventually, we came back into this area of supply here. You can see it even better on the 5-minute. We tapped into this area. Then this was the entry. And this was the target. So another 10 to 1. So my entries vary from a 15 to 1 to a 5 to 1. Sorry. That's not my entry, my take profit. But the 4 hour, the 1 hour, like pretty much the 4, 3, 2, 1, 30-minute all the way down to the 1 minute. Depending if I'm looking for a confirmation entry or an aggressive entry. Aggressive entries are chill because you can just put your entry down. You can chill, you can close down your computer, you can go home, you can do whatever you want. And you can wait for it to play out, right? So it's super chill, super nice. For the confirmation entry, you have to watch it, you have to be there. However, you can reduce your risk dramatically with confirmation entries and higher your risk to reward as well. So it's just your personal preference. What I do like is when I have a aggressive entry and I go in on the higher time frame, I narrow it down to lower time frames to look for, again, breaks in structures, etc. Once I got that, that's the moment when I, you know, go for re-entries until I get proven the other way around. So until I get proven otherwise. So pretty much once I got my first aggressive entry, I look for confirmation entries after. I don't get lazy. And this gives me sometimes 4 or 5 trades in a row. Profitable. And literally this is how I, you know, when I started, and I really understood this when I scaled up accounts from, you know, $1,000 to $10,000 just like that, with one good trade setup, without that much risk, really. So right now we're on a different playing field right now, but it's magic, man. And you know, I started trading crypto, right, as well. So because I started trading crypto, I was used to massive volatility. However, a lot of people told me, like, why are you trading Forex now? What's the reason for trading Forex? Why are you not trading crypto? I'm like, bro, understand this, right? People do not understand the fact that Forex can be way more profitable than crypto. And the reason why is because of your stop loss, right? If you say I'm going to risk, let's say, $100 in crypto and in Forex, you can narrow it down in Forex to the 1 minute chart and literally have a 3 pip stop loss, so you can invest way more to get the same amount of risk, right? So you make in the end way more money, right, than in crypto. In crypto, the stop losses are, if you want to really nail it with crypto is harder to trade, because if you want to use the strategy, you can. It still works, I can prove it to you, but overall, your stop loss will be, you know, your risk to reward ratio will be lower than in Forex. Just because there's more volume in the market, there's more liquidity, and therefore the charts are more reliable as well. And more predictable in my opinion as well. However, in the bull run, when crypto is going crazy, right, to the roof, okay, man, that's the only way when I would say, okay, crypto could be more profitable. Did you go to school for any of this? Bro, I have no diplomas, nothing. I really believe in skill. So pretty much, I think we're transitioning right now in time. I believe right now we're at a stage where your passion rewards you. Your passion, discipline, and consistency will reward you no matter what. And I found trading highly addictive and highly appealing. The reason why is because I love probability. I played poker for a long time. I played a lot of poker. So it's very similar in a way, because poker is, it's kind of gambling, but with probability, so you can always create an edge in the market, right? Also in poker, you can have an edge over other players, and therefore you can win in the long term, in the long run. You cannot win every trade, but over the long run, you will win, right? And this is the same with trading. So I see a lot of similarities. And yeah, I realized I could make way more money in trading than with poker. So right now I still play poker for fun and with friends, and I'm going to some poker tournaments as well. But overall, trading is now my main source of income right now. Absolutely. And the key is to create cash flow. Cash flow is king. So you want to create as much cash flow as possible, because you know, cash flow is everything, right? So what I do, trading is the perfect cash flow generator. You have a certain portfolio, you build out these portfolios, you can compound that, and then over time you have a certain amount in your portfolio, and then you can say, okay, everything above this level I invest. And this is the money you invest then long term into crypto or long term into whatever. Things that you think that can grow in value over time. And it's an ideal system to generate cash flow, to then invest and wait over the long term. So if you constantly are generating cash flow and you invest these profits into, you know, the market or into other sources, this is what's creating what creates true wealth, right? So actually trading is just the first step to creating generational wealth if you do it right. But it's not the end station. Trading is not the end station. Trading is to create cash flow, to invest over time. And what I see a lot of people do, they have a certain amount of money and they invest everything and they're gone. They have to wait for it to go up and down, but they do not have cash flow. So then they have to work again and have to do something else to generate cash flow again, to then invest, right? Or people want to live from their investment, but you cannot live from your investments. You should live from your cash flow and enjoy life from your investments. These are the key fundamental differences between trading and between investing. And that's why trading is everything, man. So is there any other pair you guys want me to check right now? We saw a clear rejection right here. on GJ. I would still prefer to see a break of this trend now. All right, GU and CJ. Okay, let's start with CJ, okay? So I traded CJ already. However, I always start macro, right? Standard. Just to get an overall feeling of what is happening in the charts right now. And we're pretty much at the top, right? A lot of imbalances here in the market right now. A lot of imbalances here also. So, okay, that's good to know. Then I want to actually know if the Canadian dollar looks stronger than the Japanese yen. So what I do when I'm not sure is I go to the currency indexes. And I look at the Japanese yen and then the Canadian dollar index. It's very choppy, but it doesn't matter. You could still get an overview of what's happening right now. So for the Canadian dollar currency index, we're seeing a break of support right here. This is on the daily, right? I only look at the daily. So we see a break of support and we broke the support, now forming resistance, right? So the Canadian dollar currency index looks very weak to me. Then I go to the Japanese currency index and I do the same thing. It bounced off from support. It actually broke resistance and now is stagnating in between. So if I compare the Japanese currency index right now to the Canadian currency index, in my opinion, the Japanese index looks a little bit stronger than the Canadian currency index right now. So I take this in consideration, right? So, conclusion, Japanese currency index looks stronger than the Canadian currency index right here. So let's have a look at, let's go back to CJ now. And that means right now that I expect the Japanese currency index to bounce a bit stronger than the Canadian dollar index right now, right? So knowing that we're also on the top, I believe right now that we can potentially start looking for any shorts. However, we do not have any confirmation yet whatsoever in any way or form. We saw, yes, a lower low getting created here. That confirmed this area of, supply. This is why we saw the rejection here. However, we're still creating higher highs, constantly creating higher highs from this here on the 4 hourly as well, right? So what do we want to see right now? We want to use this as a premium area of supply and now look for more weakness in the chart. So what do I do now? I look for liquidity. Do I see any liquidity getting built up that has not been mitigated yet? This liquidity was taken out by this one right here. So not really. However, we see a huge pool of like a very, very clear trend line, right? And this trend line is extremely, extremely clear. It's too clear. So take that in consideration, right? Retail traders, they just look at a trend line. And they think, okay, whenever we bounce from this trend line, I go long. Bounce, go long. Bounce, go long. Right? At some point, we have to break this to grab the liquidity from this range right now. It has been how many touches already? 1, 2, 3, 4. 4 times. If we look from a high, low perspective, right? So weakness is forming. The reason why we tapped into this supply zone right now, and I would not enter here because, you know, look at your stop loss, it's super big. And overall, in general, it could easily just break through as well. However, yes, we created this lower low, right? So we take this in consideration, but still. So we want to see confirmation right now. We're on the 1 hourly right now. So what do we want to see? In my opinion, we go to the 30-minute, maybe even 50-minute, and we mark out an area right now of consolidation. So in this case, we look at an area of consolidation here, which is in my opinion this range right here. Consolidation. This is the low, this is the high. Right now, we're looking for a break of this range, right? So what we can do is we can just now look for a break of this range. Let's say we break down. We break out of this consolidation. I would use my fixed range volume profile, tap into this zone, mark out the point of control. Does the point of control aligns with a supply zone? Absolutely. Look at this area right here. Even the 5-minute. Right? This supply zone is not valid yet. Keep that in mind. This supply zone is not valid yet. However, you can mark it down as not valid. Right? So right now, we have this area. If we do tend to break out of this structure right now, we come under this line right here. Right here. Then I expect a retrace to this area of supply to then move price further down and to grab the liquidity from this trend line, which will give us then a now about 9 pip stop loss. So let's wait off on CJ right now. Let's see what happens. If this would happen within the stream, I will be super happy because yeah, proof, right? Proof of a working strategy. However, keep still in mind, there is still imbalance here. So I would not risk 1%. I would risk 0.5% or, you know, 0.25%. But that totally depends on your own metrics. However, watch me. If it breaks the stop loss, it will come back into this area of supply. High likelihood we go see lower targets from there on. And you have the confirmation from the higher time frame all the way down to the 5-minute, in this case 5-minute chart. So I hope that answered your question, Steven. And nice to meet you, man. I love your Binance logo. I love crypto as well. So let's go to GU. Okay, GU. So GU, clearly, we are on the 4-hourly, right? You can say daily as well. Massive, massive downtrend. But no signs of reversal whatsoever. No higher highs, nothing. So there's nothing to worry about. You still can look for potential short opportunities in the market. Until you get proven otherwise on the daily chart, right? And especially when you see something like that. When you create something like this. Maybe even this. My bad. When you create something like this. come back, then we're seeing a clear change of trend right now. Until that moment, you can look for short opportunities in the market. Then I go to the 4 hourly. And I look at the last significant area of consolidation. And then a major break of structure, which is this zone right here. This is the break of structure right here. So this is the last area of consolidation, the last high we saw before that major drop off, right? So this is the area where I look for potential no fib levels, etc. So are we in an equilibrium? No. We're definitely far below the equilibrium right now, right? We have massive imbalance here as well. So would we go for an aggressive entry or for a confirmation entry? I would definitely look for a confirmation entry, not for an aggressive entry, because you want to have the confirmation that it's actually, you know, rejecting. So now we're going to the 1 hour, right? Now we're going to the 1 hour. We have to make sure we are only looking for confirmation entries, right? So now we're doing the same thing. We're seeing a break of structure here. We're seeing the break of structure here. Now I'm looking for liquidity. Where is liquidity? Well, definitely there's liquidity here right now. Clearly there is some liquidity right here. Almost equal highs. It's not exact, but it's pretty significant equal highs right there. We have equal highs right here as well, right? So this means there are stop losses right here. There are stop losses right there. There is definitely a lot of imbalance here, right? From this break still. There is an unmitigated area of supply here. So what I expect price to do is at one particular point reverse. Even though we're seeing a break of structure right now, I'm not really excited to look for potential short opportunities, for example, let's say in this demand zone right here, or supply zone. The reason why? Because the liquidity here, the liquidity there, the imbalance there, right? So again, we could go into a short opportunity here, but then we have to go all the way to the 1 minute to look for a confirmation and keep our stop losses as tight as possible. But for now, I assume price to first reverse back into this range right here, to maybe go for either this liquidity right here or just fill up all of this imbalance on this area to then mitigate this demand, the supply zone, my bad, and to then reverse price further down. But again, because we are far below the equilibrium on the higher time frame, we want to wait for a confirmation entry. So we do, again, the same thing, right? We know it will enter this area of imbalance. Let's say it enters this area. This is the last low. We wait until the break of this low, right? We look for a rally-based drop. We draw the fib from this area to the bounce we saw before the retracement. We look for an area at least above the 50%, preferably this range, the 79 or the 88. Doesn't really matter, everything above the equilibrium. Look for a supply zone here. Then you take your short opportunity right there. You know it tapped into the imbalance. You know it got rejected. You know it created a lower low, signs of weakness. Then you target the next stage of liquidity on the lower time frame. Tap into this area and then move further down. There's your confirmation. So be careful right now with GU. A lot of liquidity here. How to use the volume? Yeah, so this range right here. So we have the fixed range volume profile. It's right here. Fixed range volume profile. We look for an area of consolidation. So let's say this area right here. We consolidate it, we expand it, and we're waiting for a retrace. So the consolidation is where the magic happens, right? When we retrace. So you go from the starting point of the consolidation area to the end point. And you see, the volume profile aligns with the supply zone. So this is how you could narrow down your entry still a little bit more if you go in aggressively, for example. Which I would not recommend now, but normally you should be able to enter here rather than enter here. It's a tiny difference, but still, if you look at it, it's a 6 pip difference right there. So you can narrow down your areas as well, your entries. So please gold, okay. Also, welcome, brother. Zen, nice to meet you. Let's have a look at gold for you. Massive dump for gold, right? Massive break of structure. Right here. We bounced off from this break of structure. What happened was, probably on the 4 hourly, look what happened here. This break of structure that happened here, that took place here, was initially liquidity. Right? So, we bounced from it. The ranging, people went long. Sorry, people went long here. They thought, okay, it bounced perfectly from this range, so I'm gonna go long here. Okay, boom. You go long, instant dump. Take out all the liquidity from this range right here. All the stop losses were underneath. Right? So we broke structure right here. In my opinion, we're waiting for a retracement right now. So we can literally look at this area of consolidation. And we have a long way to go here. So in this case, I would wait for a confirmation entry from this area of supply. Just because it's not really affecting with here. I think a lot of people went into this area of supply right here. So this area of supply is way stronger. However, this is where the break happened. Right? We saw a clear rally, base, drop. So I definitely noticed this supply zone right there. However, again on the daily, look at where we at, right? This was the last area of consolidation. So we are actually above the equilibrium. So we could go in aggressively here. And we could assume that this area of support becomes a high area of resistance in this case, right? Look at this. Resistance, resistance, support. Resistance right here, resistance right here, resistance right here, resistance right here. Support right there. Support right there, resistance right there. Aligns that perfectly with the supply zone? Yeah, absolutely. So, above the equilibrium? Yes, perfectly. Because we saw a consolidation area, a drop. The higher high of this consolidation area is a starting point till the bounce of, the lowest low. So this is how you can calculate the equilibrium. So we have a lot of imbalance here. A lot of imbalance here as well. So either we're going to get a rejection from this range right here, which I would wait for confirmation. Right here. This is 1760, or aggressively at the 1806. Stop loss above the supply. Targeting. We don't know what to target yet, and the reason why we don't know what to target yet is because we want to see if liquidity gets built up underneath. Then we can literally look for potential opportunities in the market, and then we can yeah, look for take profits. But that's pretty much the first stage right now we're in. So we're waiting for a retracement right now for gold. There is no way to long right now. You could say, okay, I look on a weekly, but I don't see any significant areas of demand right now. So let's wait for a retracement. I hope that answers your question. So I'm curious, we talked about CJ, right? About the Canadian dollar and the Japanese yen. It's looking very weak from this area. This is a non-confirmed supply zone right here. So right now, like I said, we want to see this consolidation range getting broken. So we want to see a lower low right here. We want to see a break of this structure here. Then come back into this range. Then come back down. So this will be a perfect entry. This supply zone will only be confirmed if we're creating at least a lower low of this range. Then we confirm our supply zone. However, in order to confirm our entry, we want to wait for a break of structure from this whole consolidation area. And I'm looking forward to this trade because it makes a lot of sense, you know. So much liquidity is getting built up here from from retail traders that went long. We tapped into a major area of supply on the top, pretty much on the top, right? We have a lot of, you know, imbalance underneath also, still. A gap that has not been filled yet. Pretty much a huge gap right here, like right here. Huge gap. Again, a huge gap right here. It tends to get filled up because there are not many orders placed. Most of the time it fills up the gap and then moves price further. So yeah, definitely lower targets right here. We see also liquidity right underneath. A lot of stop losses most likely are under this area. Right here. Right there. Including imbalance here as well. So definitely more downside potential for CG right now. Absolutely. Bearish divergences on the daily. Yeah. So yeah, let's see what it does, right? Let's see if it breaks structure right here and if this supply zone will be valid. Right now, this is not a valid supply zone yet. Let me put non-valid. This area is a valid supply zone right here. So you can take this consolidation on the smaller time frame as well in consideration, right? So you have to understand the market is a fractal market. It's all the same thing. So the lower the time frame, there are again consolidation areas, break of structures in the lower time frames too, right? All the way from the monthly towards the 1 minute, it's all the same thing. So we need to make it work together, and this is what I've seen is the hardest part for a lot of traders, and this is what I personally struggled with the most, is how can I eventually start at the daily and move to the 1 minute chart to find my entry and to make everything align together. If you figure that out, you got it, you cracked the code. That's it. So yeah, this area of supply is very legit. This area is not valid yet. But let's see. Hello bro, can you show the last win or time of the stream? Yeah, just go to my previous stream and have a look there. Otherwise, you can also see my... You can see it if you want. I'll make a screenshot right now of my position. So this was one of my trades. Yes, this was one of my trades just now. I don't know if you can see it. Wait. It's a bit small, right? Okay, wait. Sell GJ this price, selling at this price. Sell eventually here. This was yesterday. $1,000. So yeah, what we're gonna do is right now, I'm gonna start a new challenge. And what I wanna do is I wanna show exactly every single trade I'm gonna do on this challenge. Of course, you have to trade for yourself and make your own conclusion, but yeah, we can definitely help each other. I'm still in a new position right now for GJ, by the way. When we start, I will start next week, I think. I think from, like, I cannot give you an exact date, and the reason why is because I want to wait for confirmation of an amazing trade first. So when I start this challenge, I want to have the best possible start, right? So therefore, I just wait until I have this start of this trade, and then I will let you know. Oh, absolutely, bro. I will go through every single trade. I want to be as transparent as possible. So I want to show my trades. I want to also show my, you know, P&L. Pretty much everything. I have nothing to hide. I've been working so hard the last couple of years, man. It's been an amazing journey. I had so many times that I just wanted to quit. But something in me said that I had to keep going. I had to keep going in order to become the trader that I am today. But the best experience came from actually working at a hedge fund or an investment fund, I can better say. It was an investment fund focusing on modern digital assets, so mainly focusing on cryptocurrencies, but also on, you know, trading in general. We had a small trading firm, and I came there as a pretty rookie, and I learned a lot about how institutions are trading and how they pretty much are entering the market. So it's so different to how we trade right now and to how we, assume that we think that everyone trades like that, but there are so many different ways of trading also. However, this strategy that I'm trading right now makes the most sense, in my opinion, if I look at how institutions were trading. And it makes sense that they cannot trade the same thing, because we can just place one big order. For us, it's no problem, right? But if you have billions of dollars, like our investment fund was not that big. It was just, couple $1 million. But let's say you have a huge bank that trades, right? An investment bank. Billions of dollars every single day. They can never place one single trade. They have to make at least 5 to 10 trades to get on an average position. And then they have to make sure that that average position is good enough and it will not go above or under that if they short or long, right? So it's a completely different way of trading. So you have to know what the average entry is of an institution. And that's why I use the smart money concepts in combination with consolidation areas and these volume profiles, because volume profiles are showing average order value, if you get what I mean. So yeah, I will definitely start streaming 5 days a week right now. Monday is the first day. Today's Friday. Monday I will be back. And yeah, maybe trade a little bit of crypto in the weekend. It depends. There is no volume right now, but let's see. There we go. Liquidity taken here. So we came back down, liquidity taken, came back up. Area of supply on the 15-minute, right? We see a drop, base drop. We see an area of supply right here. We see actually that this is a complete range of consolidation, right? This is the bigger range. And this is the smaller range. Right there. I think we saw the volume area low here. So let's take the bigger range. Volume area low, you see? So this is the volume area low. Support, resistance, dump. So we took out the liquidity. Stop losses here. We took them out. We came back into the supply. We mitigated the volume area low of this whole range. And then dumped further. So again, guys, whenever you see equal lows or equal highs, be happy. This is the moment. This is where you look out for. You want this to be taken out. Equal lows and equal highs. So what can we expect now for GC? First of all, filling up this imbalance on the higher time frame. So when this is done, we're gonna see a bounce from here for sure. We're gonna see a bounce from this range. I can assure you that. And then when we see this bounce, The question is, how strong is this bounce? So is it going to be a huge bounce? Or are we going to see first a major, like some consolidation here, right? Because if that's the case, then we're going to see a drop and we're going to take this liquidity here. So it's either one of these, or in the instant bounce from this point of control from this range, and then really like see significant volume coming into the market. Otherwise, I expect lower prices. So let's see right now. Let's see what happens, right? Let's see if volume is coming in on the 50-minute. Beautiful. We also have right here a nice area. Right there. So here we could have had like multiple entries right now. So like again, we're seeing again a bounce from, like on GJ, we're seeing a bounce again from this trend line. We took the liquidity from this range already. However, the question remains right now. When are we gonna go there? When are we gonna come here to this range or to this area right here to fill up this imbalance right here? A lot of retail people, retail traders are coming into the market here. Okay, we're entering the zone right now. Personally, I expect something like a bounce from this range. Come back up again. To then either come back down. Or if we break this area, then bounce from here and then go up further like that. It depends how high we go. However, if we just drop like that, then obviously we're going to go lower and we're going to grab this liquidity straight away. %. So we're going to keep a close eye on this one. I'm very, very looking forward to this. Man, I cannot believe that the euro has been crashing down so much. Well, it doesn't surprise me, however. It's still crazy, man. Praveen Kumar, GU. Nice to meet you, bro. My name is Lorenzo. Pleasure meeting you. I'm quite new on YouTube. I have been streaming on different platforms like Twitch. So yeah, I'm gonna be here now, like a newbie. So you want to see GU, yeah? I have covered GU a few times, but no worries. So what we can do, bro, I look on the higher time frame and see an area of consolidation, right? This is a huge area of consolidation right here. Then we saw the break of structure actually happening on the daily first. Then we draw the fib level from the lowest, from the high towards the low right here. This is not to enter. This is just to look where are we at in the overall chart. What is the chart telling us? How is it looking, right? And are we above the 50% or under the 50%, which we call the equilibrium? In this case, we are far below the equilibrium, right? The only answer that this will give us is, are we trading for aggressive entry or are we gonna look for a confirmation entry? We have to look for confirmation entries in this case, right? So in this case, we're gonna narrow it down. We go to the 4 hourly and we look at the same thing. Area of consolidation still gives us the same indication, right? This area of supply is under the equilibrium, also on the 4 hourly. So still, there is no way, whenever we see a retracement to this zone, that we can go in aggressively. This is pure risk management, super important. This is why many people get stopped out, because they go in aggressive, it comes down and just goes straight to this area. And you're like, what? It's perfect. Everything made sense and it still broke my support. Well, look at the higher time frame and the equilibrium. Where are you at within the chart? So in this case, we want to sell for a discount, you know, buy for sell short for a discount and exit for a premium. So therefore, we need to wait for a confirmation if that is not the case. So the reason why I picked out this area is because we saw a nice area of consolidation here. We saw a drop. We saw the point of control of this area on the 1 hourly right here, perfectly aligning with the supply zone, which is this supply zone. I believe it's a 4 hour zone. Yeah, this candle right here. This candle. This one. So we take this one in consideration. And what happened was we came back up. We had a massive drop, right? So again, we have a rally. We have a base right here. And we have a drop, confirming our supply zone. Clearly. This drop created massive imbalance in the market. We came back up, but we didn't manage to fill in this imbalance yet. There is a gap here. And what the market does, it tends to fill up any particular gaps in the market, right? Besides that, on the 1 hourly or the 30-minute even, it left us with a lot of liquidity also, right? Equal highs. People went short here. We call them early shorters. People went long here, short here, and people went long here. People that went long immediately got trapped because price reversed. If they didn't get stopped out, right, they are still trapped in their position. So therefore, whenever price retraces, people exit that got trapped, and therefore the price dumped further. This is what you see here, right? This is why this area of supply was valid at the time, right here. You see that? We saw a break of structure here on the lower time frame. Right here. or a change of character, you can say as well. We came back into this area. Everyone that went long here, that got induced to go long, eventually exited the market on break even, and that made the price go further down with a lot of people shorting at the same time. This is why we saw this rejection right here. However, in this case right now, it left us with liquidity above this area, because if you look on the 30-minute, we see equal lows right here, or equal highs, sorry, equal highs. Equal highs means, you know, if people are shorting here, where are they putting their stop loss? Well, obviously above this area, right? And this is exactly the area where the imbalance is as well. So we have the combination of imbalance in combination with the stop losses here. So this is what market makers would like to see. And with this confirmation as well, we have as extra confluence that we have the point of control. This is where institutions most likely went short already. This is when, okay, so pretty much. This is where retail went short. This is where institutions went short. This gap is meant to trap you. So, yes, it filled here. It created this area. But I can assure you, next time we enter this zone, we take out this liquidity first. If we do not manage to break, if we do manage to break above this area of supply here, to take out this liquidity, we're gonna go here. We're not gonna go here. We're gonna go here. Maybe it will consolidate a little bit, right? To just come back down. To then just like go up. Gather all the stop losses. At that particular moment, we are waiting. We're going to the 5-minute. We are looking for a confirmation entry right there. So now we are here, right? Now we are here. Let's say we are entered this range. Everyone got stopped out. We look at the rally, base, drop. Rally, base, drop. We find a new supply zone. We use the fib levels for that, from the high to the low of the bounce when it retraces. Let's say there is a nice area of supply here. Then this is the way to go. We enter here. Stop loss. 5 pips. Target. Let's see from there. We don't know yet. There we go. This is your confirmation. This is a confirmation. Sorry, I did it here, but I meant this way, obviously, because here's the liquidity. When I zoomed in, I meant to target this one. This range right here. So I hope that gave you a good answer, bro. Expect a retracement for right now. If we do not expect a retracement and we fall back down more, that's fine. We just wait. Looking for new areas. You know? Melissa, and nice to meet you. So I started trading around in 2017, like 5 years ago. But I really started to trade when I worked at that investment fund, which was around 2 years ago. So yeah, this is the moment when I really started to take it serious. And when I started to, be obsessed with charts, right? The only thing I could dream about was charts. I was dreaming red and green candles so much that I decided to change this candle formation, right? The colors. So yeah, let's have a look at. Yeah, again, rejection of this zone. So yeah, we can definitely see dump right here. Create a lower low. Let's see what happens. However, keep in mind, liquidity here. This is GJ. CJ right now. Very interesting. Yeah, bro, I just showed you that trade. This was the trade from yesterday. So this was GJ. On the 1 hourly. This is where he went in aggressively. So from this area, the sniper entry right here. Close my position at 163. What is it? Let me see. 163. We closed the trade at 163,744. So that was 744. Yeah, there was this wick right here. When we saw this wick, this was the moment when we saw a clear area, clear bounce from this support right here, from this demand zone. But you will see it yourself. So next week I'm gonna do live trading, actually doing a challenge. So I'm gonna do these. I'm gonna do a challenge from the beginning till the end, and you can literally see any trade. You will see my P&L. I will make a separate account for that, and you can see it from there. What's very important is that don't base your trading just on this chart right now. What I'm explaining you, always make your own decision. Another trade I can show you, I think that was also very nice. I think this aligns also perfectly with the point of control. That was US cut, USD cut. Was a nice trade as well. Let's see if I can explain this trade. So this trade right here, I don't know if you can see it. We have to zoom in. This was 3 days ago. 5 lot size, US cut, USD cut. Shorting at 134.02. We're gonna get there soon. 134.02. Exited at 129.914. That's me working at the investment bank. And yeah, was a very good trade. So let me go over this. 134. Oh, where was my entry? 134.02. Exit 130.152. It's actually good to look back at some trade history as well. So we USD cut 134.2 at the 12th of July. I need to see why I did that. Ah, okay. Okay, clearly, this was the reason. So, you saw my screenshot? So now here, this was the area of consolidation. Right here. Area of consolidation. Expansion. Down. Breaking of structure here on the lower time frame. Coming back, tapping into the supply zone. To mitigate this area of imbalance. To then drop further down, right? So my entry was at I actually missed it the first time, but it broke structure again, then created a high. So stop loss here, exit. Where was my exit? 904. Yeah, it was a minor trade. 3-to-1 trade. $2,000. The reason why probably is because I saw a lot of selling pressure coming into the market right there. Also, point of control. Significant resistance. Clearly, resistance, resistance, resistance until this smashed through. Right now, would definitely not go short. Wait for a bounce from this point of control. Then maybe look for potential long even. I think GU was going bullish. Yeah, I think so. On the short term for sure. So, if you look here, right? Then of course, it needs to retrace, right? In order to come back down further. So of course, we're going to go bullish, right? Like short term, at least. If we are going to see a retrace, then definitely, yeah, this is a 2% move. If you want to go to this confirmation entry to fill up this imbalance here, then definitely it's a short-term bullish momentum. But does it give us any really good bullish setups? I don't think so. I think the chart is still telling us we should look for shorts right now until we get proven otherwise. The only way we can look for potential longs is literally if you zoom out right here, either creating, you know, a massive bump, creating like a higher high, right? To then come back into a demand zone right here. Let's say here's a new demand zone. Tap into the zone to then move price further up, right? Then you could say, okay, maybe I enter here, position here, stop loss at this point of whatever, this area right here. Then you go short. So then you hedge yourself straight away and you enter a short position. What you can do is you open a short position 50% of your long position. If you then go up more, doesn't matter because you're still in your long. You're making more profits. If you literally got the confirmation and if you short, you close your long and your short now can run on break even instantly. So you keep your both and your long and short open until you can put one of those break even and close your other trade. You get me? And this is the way you can hedge yourself and to make Yeah, very, very nice trades and risk-free, pretty much. Once you got your first winning trade. So you could also, this is another strategy, but you could also go long or short and then just wait for a reversal to close your position, right? But you only close your position when you already got into the other trade and you got that trade already on break even. So yeah, that's pretty cool. There we go. This was indeed a not valid zone. This was a valid zone right here. Again, small range, small area of consolidation. So nothing special. However, massive drop. So let's see what happens here right now. The goal is to actually initially look for the area of supply. But keep in mind, a lot of imbalance here, right? A lot of imbalance here. So it could definitely be the case that we just go up, then come back down. Look for confirmation there. But on the higher time frames, there is so much liquidity built here that sooner or later we're gonna come down to test this area to fill up the gaps, to fill up the imbalance, and to you know, actually make pretty much close all the liquidity down there. Okay, I'm gonna go soon, guys. However, I still want to go over Bitcoin real quick, and the reason why is because it's weekend. And maybe we can trade it in the weekend when we wait for Forex, when we wait for these other pairs, right? So two scenarios that can play out right now. We have obviously a very beautiful area of consolidation here. We broke this area of consolidation, right? Break of structure here. Imbalance here. Obviously, a lot of imbalance here. But this is the 4 hour, right? So keep that in mind. Beautiful supply zone right here. A lot of imbalance right here. However, the thing that bothers me a little bit is when I go on the higher time frame and I look exactly for patterns, right? I see the following. I see a massive drop right there. I saw a massive drop right here, right? Then what I see, we dropped lower low. Right now we dropped, creating then a lower high, higher low, higher low, higher high, higher high. Now the question will be, are we going to create a lower high or are we going to create a higher high? If you create a higher high, I'm convinced that I can go long here tonight, this weekend. Possibly, we don't, who knows? Come back into this range to then go to this area, test this area right here, which we could definitely go to. I mean, definitely. Let's say this will be the case, right? 7-1, right? We can wait for a confirmation entry on lower time frames, the way I explained to you guys earlier. And look for, you know, to reduce your stop loss and to go for a higher risk reward. But this is the main assumption, right? If we do not tend to create a higher high right now, super important, I expect the next drop, massive drop down towards towards the 16,000 to the 15,967 to be exact. Pretty much this area of demand here. This area of demand. So at least we're gonna tap into this zone for sure. Right here. If you do not tend to create a lower high right now. Or a higher high. We saw massive lower high here and then a huge dump. This was a typical wick-off strategy, right? I'm not sure really familiar, but I know this is the lost point of supply. And then we just drop. We failed to create a lower high. Second test and dropped. UT, second test, drop. Pretty much. Again, let's say this is the UT. Second test, drop. So this weekend will determine everything. I know everyone is super bullish on Bitcoin. Yesterday I saw it already from here. People were super bullish right now. But still we have this area of consolidation on the lower time frame, right? This is what we need to break in order to make sure we can look for a demand zone right here. To look for an entry right there to go long. If we do not tend to break this range, then we're going to drop hard. This is my assumption right here. So again, nice area of consolidation. Break of structure. Right here. Point of control. This is the moment where you have to look out for. So this weekend, look at this area. The 21.6. 21.6k. This is the area where you have to look out for. This is what's going to determine a lot for Bitcoin right now. Because we're almost at the end of a daily pattern right now, showing us what we're going to do. We're going to either go back up to fill this imbalance. Right? But the way it works is pretty much we go up, we come back down, and then we move forward. Or we filled on the 1 hourly to create a higher high to then just go down, in my opinion. If you then create a lower low, you can look for another supply zone right here to then get your confirmation and look for a nice trade right there. Could easily be a huge trade from here. It could definitely be a trade, something like that, right? So we enter the zone, we fill, create a lower low, come back into the fib. We draw the fib from this high to this low, come back into this area, then come back down. This could be a nice demand zone right here. Supply zone, my bad, sorry. Supply zone right here. Short here. Stop loss there. 1% stop loss. 16 target. But it has to create a lower low. Keep that in mind. It has to create a lower low as well. So if we create a lower low here and we come back into this range, 16 to 1. If you do tend to create a higher high, we come back into this area. Maybe we can long from the point of control. And then look for a massive pump. So we're going to see it either this weekend or early next week. We know exactly what Bitcoin is going to do. We're going to make a major move again. So let's see. Last time. Nothing crazy. GU. Short-term pump right now. I expect to retrace upwards. Somewhere here. Or mitigates this supply zone to then drop further. Totally depends. A lot of liquidity here. Keep that in mind. So thank you for watching my stream, guys. This was my first interactive stream on YouTube. I was always streaming on other platforms, so thank you. I will be back on Monday. I hope to guys see you there. I will help you guys out with trading, with charting. I will never ask you for any money. Yeah, have a wonderful weekend, guys. Thank you for listening, for staying, for sticking with my stream. Smash that like button if you didn't yet. And man, crush it, yeah. And yeah, I'll speak to you guys later. I'm very, very looking forward to share and to yeah, move forward with the streams 5 days a week from Monday to Friday. Same time, most likely the London session. And I'll speak to you guys later. Thank you. Thank you guys. Bye-bye.